Welcome everybody to the 40 Finance channel. Today I'm going to share my outlook for the TQQQ and the QQQ here in 2023. The market is off to a very hot start here in January, so we're going to look at the fundamentals and the technicals and try to get a feel for, how much further can this thing run. I decided to make some investments in the QQQ and the TQQQ last year. Part of the problem that I saw with the run-ups and run-downs that came during COVID was really just in the individual stock names. So a big part of my investing mission last year was at least to add a baseline ETF holding, that being the QQQ, and then accentuating that, if you will, with shares of TQQ as well. And I was doing all this throughout the year in a time, obviously in 2022, interest rates were rising and the momentum, if you will, for tech stocks and growth stocks, at least those tied to the Qs, was very negative. And we definitely saw a huge decline. My portfolio went way down in 2022, but we're seeing some signs of life right now as we enter 2023. The question is, though, how far can it continue and where do I stand today? And as always, we're going to be using Seeking Alpha Premium. This is a platform I've been using on my channel for a couple years now. And if you're interested in learning more about Seeking Alpha Premium, my affiliate link is in the description. Gets you 50% off a full year. Works out to be about $10 a month. And in my opinion, it is far and away the best value in terms of a stock market research platform. I just did a video on it actually about 7 days ago, so you can check that out if you're interested. But great platform, potentially helps support my channel by checking out that link in the description. All right, so let's start here on the TQQQ page. You can see huge run up today, plus 10%. And if you're not familiar, the TQQQ is basically the 3x triple leverage version of the QQQ. So when the QQQ goes up or down, the TQQQ mimics that 3x on a daily basis. And that is the key. This is on a daily basis. So I've done a lot of educational videos on the TQs about how it works, what are the risks. Short read is no, it does not go to zero, or I should say that's a very unlikely scenario. However, it does go up very fast and down very fast. And it's definitely one you don't jump into without reading about and making sure you understand the risk level that's involved. Now, as far as where I stand right now, I own approximately 200 shares of TQQQ, and my cost basis is $39.50 as of right now. And over the past 6 months, I've been talking about on the channel, I've been adding a share here and there, 3 shares here and there, stuff like that. No big buys. I haven't made any big purchases in TQQQ for a long time. Really, I try to keep it under the 10 to 20 mark in terms of shares that I purchase at any one given time. That being said, as much as I've spread the wealth, so to speak, on dollar cost averaging, still at $39.50, I'm still $13 in the hole of where we stand today. Now, on the QQQ side, you can see where that stands today, $310. I am at $349 with 59 shares. Okay, so I'm still underwater. So this run up that we've had here in January, February, it's been great. I'm happy to see it, but I am still underwater with no intention to sell. And more than likely, I will continue to add in my positions as I have been doing. So the total, I have to read off the sheet here, the total value that I hold right now in both Q and TQs is about $23,500. I have lost approximately $5,000. Okay, so if I did my combined calculations, which I did, before this video, I'm minus 17% on my Qs. Okay, put together, that started approximately November-ish of 2021 and was peppered in as the decline started to come. Approximately February of last year is when we started to see the real declines come in, and I've just been adding from there. Unfortunately, not adding enough so that I could be closer to the level we're at today in this run-up. And speaking of the run-up, let's get into it as far as a forecast. Where are we at today? How much progress has been made? And what are the odds that this continues for the rest of 2023? And to do that, the first thing that we're going to start with is what I would consider to be the good news, right? Which is the momentum / technical indicators. So if you're a momentum technical trader, this is where you're getting a ton of happy signals. And then we'll dig into the fundamentals and we'll kind of push it all together. But let's start with the regular Qs since we're here. Obviously, from a price return, the past month has been great, right? Plus 13%. The median for all ETFs is 7% in that same time. So you're up 84% in the Qs, the regular Qs, versus all ETFs. And if you go down to price return versus the S&P, this is a 1 year. So I guess we'll just do the 1 month. The QQQ is in orange, plus 13%, S&P plus 7%. Now, if you go backwards and you go the past year leading up to today, you got Qs minus 17%, you got S&P minus 9%. Now, the reason that I am investing in the Qs and trying to build at least a 100 share base for my entire portfolio is more or less this 5-year chart. So even outside of the COVID run-up, if you look at the Qs right here versus S&P, the Qs definitely have a higher high potential. The top 100 NASDAQ stocks have proven over time, that they just separate from the S&P 500, and a lot of that has to do with the growth of technology. Doesn't mean it's going to happen in the future, right? But it does mean that anyone who's been in this for 10 years is up 349% versus S&P of 172. Now, you go back 6 months, or we were just on the 1 year, the S&P is definitely the safer play. I mean, first of all, you've got 500 stocks in the S&P versus 100 in the QQQ, so it's much more balanced, and it includes a lot more industries than the QQQ. But for me, and where I want to be with this particular portfolio, the Qs make a lot of sense, and I'm betting that over time, maybe not this year, but over time, we are going to resume the trajectory of the QQQ outperforming the S&P 500, and I don't need that to happen tomorrow, okay? In fact, it might happen this year from a single year basis, but I'm much more concerned about 3, 5, 10 years out. All right, now let's get into our moving averages, and Seeking Alpha does a good job here. Let me balance this on the screen. Here's where the Qs stand in terms of moving averages. Okay, so you got your price, the 10-day moving average, the 50-day is in the purple line, 100 is green, and 200 is this sort of orange, I'll call it. And you can see at the top in the table, they've done all the math for you. This is the big one for a lot of traders, okay? The 200-day moving average, we are officially above that for the regular Qs. Now, from my perspective, this is very good news. It doesn't really change my outlook or my behavior any. I do also follow the RSI, and there's a very simple formula that you can use with RSI to think about, is this a good time to buy or sell from sort of a value perspective, if you will. And that is targeting the Qs or whatever stock you want when they are trading under the 40s in RSI, ideally in the 20s is what I would say. Now, the flip side to that type of philosophy is there's a sell point. And that sell point if you follow this strategy, is in and around an RSI of 70. And of course, like you would imagine, we're getting pretty close. This is February 1st. You got an RSI of, what's it say there, 68. Now you had a 69 back in August. And then you have to go out quite a bit further. August of 2020, you had an 80. So a lot of people, you know, if you could rewind the clock, you would say, wow, an 80 in August of 2020. We all should have sold there, and I think that would have worked out pretty well. I don't know if you would have captured the peak, but you certainly would have captured something. You know, in my mind, I'm not selling because this is a long-term portfolio for me. However, I do want to call out that one of the risks that's going on right now with the Qs is the RSI is getting closer to 70. Some people take that as a time to sell or at least take profits. Now, how does all this compare? That was the regular Qs. How does this compare to the TQs? And some folks will look at it separately. I tend to use the philosophy that the Qs are the foundation of the TQs, right? Just like the ETF is set up. Other people will look at the metrics of the TQs independently and make their own decisions. So if we go down to those moving averages, technically, as you can see right here, the TQQQ has not passed its 200-day moving average yet. So if you're one of those people who was waiting to get into the TQs, as of February 1st, it had not closed above its 200-day moving average. Now, we might have seen it today because there was a big run-up, but I won't know until everything closes. And then on the RSI point, those things, they tend to stay in line pretty closely. You can see that the RSI for yesterday closed about 67. That was a notch down from the Qs, I think was at 68 or so, right? So they run close, but they're not 100% apples to apples. And if you desperately need the 200-day moving average to be crossed before you buy, as of the close of yesterday, that had not happened yet. Now let's take a look at some fundamentals. And we are in a very interesting time for fundamentals as I record this on February 2nd, right? We're in the middle of earnings season. AMD came out yesterday. They had a pretty solid earnings. And by solid, I mean they didn't do the Snapchat and totally warn that the world was collapsing. So I think the AMD earnings was good in the sense that it wasn't an abysmal failure. Intel, on the other hand, they came out, they're a big part of the Qs, and they started talking about rough times for the current economic conditions. So you're getting that 50-50 across the board. Netflix had a good earnings. Facebook had a good earnings. This stretch is huge, though, because we have a lot of the core QQQ stocks coming up over the next couple days into the next couple weeks. And one of the things that I show all the time here that I've done on Seeking Alpha is I created this QQQ holdings, and basically it represents the top 50% of the value of the Qs. So real quick here on the Invesco website, I just did the fund holdings for QQQ, and you can see percentage of fund, and you can see the names, Microsoft, NVIDIA, so on and so forth, Cisco, T-Mobile, Adobe. All of those names, those top names, are included in the Seeking Alpha portfolio. And what this allows me to do is have access to all of Seeking Alpha's data points, basically giving us some evidence into the fundamentals of the Qs. So that's what this is all about. But let's check out our current valuations. Okay, where things stand today, knowing, of course, that we have a lot of stocks that have yet to provide their guidance for 2023. And there's a lot of talk in the market right now about things getting overvalued in this particular run-up that we're having. You know, how much room do we have before things are wildly overvalued and we're back to 2021? Well, if you look at the forward PEs. And granted, there's going to be changes to the earnings estimates. I get that. If you look at the forward PEs, though, no surprise, you got some chip stocks at the very bottom, and you have Costco, which is a retailer, but then you start to get into Broadcom, Meta, PayPal, Google, and at that line, let's just start with Meta, forward PE of 19, not saying it's the cheapest on the planet, but that's not bad, particularly when you think about what could happen as the year goes on, all right? What could happen and this could go both ways, is earnings estimates could actually increase, right? We hear a lot about job cuts. We hear a lot about Zuckerberg just came out yesterday and talked about year of efficiency. We've seen in Netflix locking down passwords. When corporations turn on the greedy switch, which very well could be coming up here in the next 3 to 4 months, the economic conditions may not matter, because once they get heavy-handed with the cuts and they start pulling back from free and growth at all costs, earnings estimates can go up in an economic condition like this. But I would say roughly fair here where our valuations are at today, and the difference will become how greedy do the corporations get, okay? Now, the next thing, outside of EPS and fundamentals, we have to think about growth. And I think the expectations for growth in the Qs have been muted significantly, right? And if you watch CNBC or any show that's like that, there's a lot of talk about zero growth in 2023. That's just not how these companies operate. Let's take a look at the forward revenue growth projections for these QQQ holdings. And you have Tesla sitting at top. Tesla sort of naturally, by just how big they're getting, their revenue growth is going to decline in terms of the size of their revenue growth, right? Because they're building bigger, better things. It is down, but it is still plus 35%, okay? Plus 35% is a fantastic number. NVIDIA was at 17, potentially could go to 20. AMD, we just got some confirmation from them. Look, growth is slowing, growth is not stopping. This is double digits, okay? Same with Google, Amazon, PayPal, Microsoft, Adobe, Qualcomm, Costco, etc. All right, so when we think about growing revenue, we're not going to see the huge numbers probably that we saw 2 years ago. I think we're all used to that. But what we may be seeing is slowing growth with more profits depending on how corporations chop up their balance sheet. Let's take a look at the EPS growth because they have that right on here. I'll try to scoot it down a little bit. So EPS growth from a percentage basis looking forward. So Tesla on a percentage basis, plus 37% EPS growth projected for this year, okay? Google, slightly negative last year, back into positive. NVIDIA, negative last year, back into positive. Now, these are based off consensus projections. Things can change. I get that, but it's a very good sign. AMD, huge EPS cut last year. This year, opportunity to grow double digits. In fact, if you want to talk about double digits, which is everything up to this Microsoft line, you have Microsoft, Adobe, Costco, Qualcomm, Broadcom, AMD, Intuit, NVIDIA, and Google. Those companies, based on today's projections, are going to grow their EPS line at double digits. So I talk about, in my opinion, one of the things that I look for in a stock, how good do I feel about a stock? I'd love to see double-digit top line, double-digit bottom line. These companies, at least a handful of them, have a chance to do that in 2023. And keep in mind, these numbers we're looking at today are based on projections that were made before February, so call it November, December, January, when bearish sentiment was at a peak. A lot of bearishness going on. And when you have that, analysts adjust downward. It's up to the corporations and the earnings guidance to tell us where they will likely land looking ahead. Okay, so bottom line for me, QQQ at 310 here today. What is the 2023 forecast? When I look at this, I think about the all-time high was $400. All right, I don't think we're going to get that in 2023, just to be like super fair. I'm honestly not super confident that it'll get back to $349.50, which is where my current cost basis is. That cost basis will come down because I will be adding to my QQQ position. What I do think is roughly fair for the Qs in 2023, and this is just dart throw percentages. If you took 300 and you said plus 10%, that's 330. All right, so 325, 330 for the end of the year if I'm throwing darts here today. So 325, 330, what does that do for the TQQQ? Okay, and this is where it gets hard because it's the daily performance of the Qs. So you can't just come over here and say, add 20% times 3 is plus 60%. It wouldn't really work that way. It would sort of depend on how choppy we were. But if we did look at the number of $26 and we made the assumption that the Qs get to 330 at the end of the year, essentially going up and to the right without a ton of choppiness, then you could easily get into, $35 mark, something like that. And if you had what we had today, which is huge spike up, Fed comes out in March, says interest rate hikes are over, earnings are good, another huge spike up, then you could probably get into the 40s on the right day, but you would need that continuing momentum to push through. And every time you get choppy with the Qs, so huge spike up, huge spike down, huge spike up, huge spike down, it makes it very hard to make progress towards like a 35 number. The big thing for me is if I can dig out of this super negative hole, right? If I can dig out of this minus 33% on the TQs and minus 12% on the Qs, then I probably can start to get into options at a safer level and not worry about my shares going away. I can, sell profitable options without losing my shares and sealing kind of my underwater fate. And who knows, we'll see, maybe I can even get to positive by the end of the year. All right, guys, that's my TQQQ and QQQ forecast for 2023 as of February 2nd. We'll see what happens. Big earnings coming out over the next month, next Fed meetings in March. We'll see what happens, but a very good start for the year. Before you go, make sure you check out that special offer for Seeking Alpha down in the description. Potentially support my channel as well. Hope everybody's doing well. We'll see you on the next video.